Hey guys, in this video we're going to talk about the earnest money deposit when buying a home here on the East Bay. Now before we get started with that, let's cover a couple administrative items. First of all guys, if you're looking to buy or sell a home, look around the screen. You'll see my number somewhere up here. Please give us a call. We'd love the opportunity to talk with you. Also, if you're somebody who stays updated regarding the real estate market, again, look around the screen. You'll see the subscribe button, subscribe to our channel, and finally comment below. Love to hear from you. Let us know how we're doing and let us know if you have got any questions. Again, in this video, we're going to talk about your earnest money deposit. Now, one of the first steps when buying a home, once your contract has been accepted, you're going to submit an earnest money deposit. Now, that money is held in escrow, and we're going to call it that is there to hold your transaction for you and keep you in the transaction. Now, there's some technical terms with that and so forth, and we'll get into that in just a minute. But let's talk about that earnest money deposit. First, your earnest money deposit becomes part of the pool of money that is applied towards your down payment and your closing costs. So at the end of the transaction, a pool of money will be applied to your down payment and closing costs. That down payment and closing costs is actually commingled, and that earnest money deposit is going to be applied to that. Okay. Now, how much is the earnest money deposit? It really kind of depends. There's just really situations. In most cases, there's nothing. Well, first of all, there's nothing that defines and says this has to be the amount of your earnest money deposit. We're really looking for something that makes a strong statement that, hey, you really want this and you're going to move forward with this transaction to the sellers. Okay, so typically what we say is about 3%. Now that 3% number, there is in the contract what's called liquidated damages, and the contract limits that liquidated damage to 3%. That's why that number pops up. You can actually put in more than that, you can put in less. And there's a couple of situations where there is more and less required. For instance, a VA loan. Like myself, if you're a veteran and you're using a VA loan to buy the home, there's no down payments. That's one of the benefits to a veteran. Now, being that there's no down payment, should you have a liquidated, should you have earnest money deposit? Yes, you should. I've actually seen us put in as little as $1,000 or $2,000 when using a VA loan. I would not suggest that. I would suggest a little bit more if you can, but we have gotten away in situations with a fairly small amount. Now, remember, I said 3,000 or 3%. If you're talking a $500,000 purchase, 3%, again, you're talking $15,000 for your earnest money deposit. So you can see how much it ends up being. The next question is really, how soon do you have to put it in? Traditionally, we're talking 3 days, 72 hours. The documents, that's what it defaults to. You'll see some realtors will say, hey, we want you to have it in just a day. I've seen situations where it's increased after contingencies have been removed and so forth, okay? Hey guys, I did talk about one situation where you do have a higher earnest money deposit, or it's required, and that's in the case of a probate. Now, if you run into a probate, traditional probate, your earnest money deposit does not have to be anything high. There is a situation where you've got a 10% earnest money deposit. In a traditional transaction for a probate, you're simply buying a probate home. They have the authority to make a decision. The administrator or executor has the authority to make a decision, and it's not going to court. Your earnest money deposit is simply just up to 3%, like any other transaction. There is a situation where the probate has to go to court, and there's court bidding that happens, and that situation there is possibility of a 10% earnest money deposit. Okay, so if you have an agent telling you you've got 10% earnest money deposit and you're not bidding on it in court and so forth, that's actually not true. Your earnest money is going to be just like any other. So again, guys, there's one situation, and this is what we call liquidated damages. Now, earnest money, there is a situation where it becomes in jeopardy, where you could lose those funds, or they go to cover damages or the seller's damages. Now, let's talk about those situations. First of all, we got to talk a little bit about the contingencies. There are a number of different contingencies. There are three main contingencies that you'll run into in the transaction. That's your investigation or your inspection contingency, your appraisal contingency, and your loan contingencies. What these contingencies do is they protect you. So you as a buyer, your investigation contingency allows you to investigate the area, allows you to investigate the property and do inspections on the property and so forth. You may have, say, a 10-day investigation contingency, and when you get to that 10-day, you're required to remove that contingency. Now, once you've removed that contingency, or prior to removing that contingency, you can back out of the transaction without putting your funds or your earnest money at risk. If you've removed that contingency in writing and you attempt to back out of the transaction, your contingency is then at risk. Okay. Now, same with the appraisal. If you have a 15-day appraisal contingency and before that appraisal contingency is removed, you get your appraisal back, the home does not appraise, or there's a problem of some sort with the appraisal, you can back out of the transaction without putting your earnest money at risk. Now, if you've removed in writing again that appraisal contingency and you try to back out because of the appraisal afterwards, then your earnest money deposit is at risk. And this goes on with the loan and so forth. Okay. Now, liquidated damages, you've heard me say that a couple of times. Basically what that means is if you as the buyer do something that causes damage to the seller, financial damage to the seller, then your funds could be at jeopardy to cover those damages. Now, if we get into a liquidated damages situation as a realtor, that kind of goes beyond me legally. And one of the things we do is really refer you to a licensed California real estate attorney to really advise you on that end of things, with regards to liquidated damages. So guys, again, if you got questions and so forth, let us know below. Call us if you got questions. Remember, and if you're looking to buy or sell a home, guys, my number is going to be somewhere on here. Reach out to us. Love the opportunity to talk with you. And also, if you're somebody who stays updated regarding the real estate market, again, look around the screen. You'll see the subscribe button. Subscribe to our channel. Again, guys, have a great weekend. Look forward to talking with you in the future. Thanks now. Bye-bye.